What's up, guys? All right, so we're going to do our Friday recap, and this is also going to be episode 2 of Behind the Trades. And today we're going to be talking about the fear of missing out. And this is something that was really impacting me this week. I was really dealing with this on several days, both the fear of missing out on particular trades, and then the frustration of having missed some really good opportunities. All right, so I'm going to start by giving you a recap of the week. And we'll start, I suppose, with the recap of today, the last day of the week. So I'm finishing today with $4,858.97, which means I'm now breaking over $40,000 in my small account. This is the account that I started on January 1st, just about a month ago, with $583. That's pretty crazy. I'm up over $75,000 this year, and 40,000 of that is in my small account. So let's dive in here and talk about the agenda for today, episode 2. So we're going to go over the weekly stats. We're going to talk about the best trade of the week. We're going to talk about the worst trade of the week. And you're going to find out that just like last week, my best trade and my worst trade were on the same stock. Last week was FFHL. This week is RGSE. And then we're going to talk about today's topic, which is the fear of missing out and some of the psychological battles that we all have as traders. And then we're going to have a segment called Ask the Warrior, where you can ask me questions that you have. You can talk about the trades that you took this week, what went right, what went wrong, etc. Now, I'm excited to announce that on Monday we had our free chat day, and we had over 2,370 traders joining the chat room. Between the main chat room and our free chat room, it was the biggest free chat day that we've ever had, and it was fantastic. You can see this is a login map of where traders were logging in from all around the world. Hawaii, Alaska, South America, Africa, lots of traders in Europe, lots of traders on the East Coast, lots of traders in China and Asian countries, and of course some traders in Australia and New Zealand as well. Now on Monday, this coming Monday, we're going to host a follow-up free chat Monday for anyone that missed the free chat day on Monday of this week. All right, guys. So mark your calendars. You'll be able to log into the chat room by 9 a.m. on Monday morning. All right, now let's talk about the weekly stats. So the total weekly gains in my small account, $26,000. Crazy, just crazy. $26,337.90. Really blew it out of the water. Last week, my total weekly gains were right around 5,500. So I really took a big leap forward. Last week, I ended the week with $14,587 in my account. This week, I'm ending with $40,861 in my account. That means I'm up 7,008% this year for 2017 versus my starting balance, which is, obviously pretty ridiculous. But I had to be really aggressive to get there. And I'll talk about the trades I had this week. This was a wild week. This was the craziest week I've ever had as a trader. I made 16,000 on Monday. I lost 13,000 on Tuesday. I made 6,000 on Wednesday, 22,000 on Thursday, and today I was up 11,000, and then I lost 7,000, and now I made a little back, and I'm up 4,800. So some real extremes, right? Some real whipsaws, and it's the result of being really aggressive. I've wanted to grow this account as quickly as I could, and I've had to take more risks than I might ordinarily take, and that's resulted in these whipsaws. So accuracy this week, 91.67%, 12 trades and 11 winners. Now, unfortunately, the one loss I had was over $5,000, and it was a 75-cent loss on 7,500 shares. So my profit-loss ratio this week is 0.46 to 1, which is a negative profit-loss ratio. It's not 1 to 1, which means based on that profit-loss ratio, when you risk, let's say you risk $2 to make a dollar, you need to be right 66% of the time just to break even. So, with these types of statistics, I really need to have very high accuracy, and I had that this week, but ultimately I need to learn, from the lesson and that loss this week and not allow that to happen again. All right, so that's kind of the big picture breakdown. I did this week trade in both my small account and my big account, and as a result, my total profits on the week are $37,000, which is the best week that I've ever had. So, and last week was a fantastic week as well. So, we're just seeing some really awesome opportunities in the market, and that's all it is. We're just seeing really great opportunities, and I'm in a position where I'm able to capitalize on them and be aggressive. Now, part of the reason I made so much money yesterday was because of the fact that I had taken a big loss earlier in the week and I was getting aggressive. I was compensating for that loss by being more aggressive and taking more risk. And that can be really dangerous. So we're going to talk about that in a moment when we talk about the fear of missing out. But let's first talk about the best trade of the week, the highlight of the week, RGSE, $7,546. This was the one that really just got me going. I mean, this was Monday morning. I made 7,500 in this account. I made, I think it was 8,500 in my other account, which gave me $16,000 in total profit. So this was a huge day. Now, the entry was really pretty simple. I got in this at 450 with 6,200 shares, and it was based on a break of the $0.50. Now, why did I get into RGSE? I got into RGSE because it was a former runner. It was a stock that has a history of making big moves, and last year we had a day where it went from $2 to $8. So knowing that it's the type of stock that can make really big moves, I was especially aggressive on it. As soon as I saw it, I was like, I need to jump in this, and I'm going to ride this momentum as long as I can. I got in at 450, and it spiked up to just under $6 per share, which is obviously a really good move. Now, I sold partial at 550, and then we dipped down just for a second. You can see here on the chart, we had this green candle, we dipped down, and then we popped back up, and as we broke this level here, over 550, $6, or 550, 560, that's when I added back 4,000 shares, and we got that spike. Now, that spike was not sustained. It squeezed up, and then it rolled over, but it was enough for me to be able to book a profit on it. All right, so that was the best trade. This was a stock that was in play the day before. Now, when you look at the daily chart here, this was the day before, this doji candle. And so when I was looking at this day here, this was Monday, I was like, okay, this is the first day that it's going to make a new high. And that's a pretty big deal. It's a reversal on the daily chart. The last time we had a reversal on the daily chart is when we went from $2 to $8 per share. That was, I think, in the fall. So I was like, okay, history might repeat itself. It's a former runner. It's making the first day to make a new high. We've got potential. And when I saw it here out of the gate squeeze from 378 up to 4, and of course it hits the high day scanners, 435, I was like, yep, this is it. I got to jump in. I see the symbol, and right away I recognize it. And that's kind of my process. When I see a stock hitting the high day scanner, the scanners are color coded. So yellow is massive volume and low float. These are typically stocks that, if they have a lot of volume and there's a good reason for it, they can make huge moves. And I'll show you some other examples of that later on. But as soon as I saw this, I was like, okay, RGSC, I'm familiar with the stock. It's a former runner, history of making a big move. I'm going to jump in. I'm going to get aggressive on it. I jumped in 450, 6,200 shares, rode the momentum up, $7,546. Now, last time RGSC made this kind of big move, it did something interesting. It had a big move, and then day 2 was the day it exploded. And that's what I was kind of thinking might happen on day 2. Day 2 is right here, where it ended up being red the entire day. Well, my worst trade of the week was also RGSC. I'm going to move my iPhone here just for 1 second. So my worst trade of the week, RGSC, right? Same stock that I had such a great win on Monday. I jumped back in on Tuesday, and I really got destroyed on it. It was a horrible trade. Between my small account and my big account, I lost $13,000. So this was obviously something that we talked about quite a bit in the chat room. So what went wrong here? Well, I got in this, basically I was chasing the proper entry. The proper entry on this was at $6. And you can see right here, $6 The first 5-minute candle to make a new high right in this area, that was the proper entry with a stop at 590. And I prepared my order to get in at $6. I pressed the buy button to buy 6,000 shares. I think it was 6,000 or maybe 7,500. And I only filled 200 shares of the order. 200 shares is extremely frustrating because it immediately popped up to 650, and I knew if I'd had that full order of 7,500 shares, I'd be up $3,000. Unfortunately, I only had 200 shares, so I was only up $100. But I thought, okay, last time this stock made that follow-through move, it ran, from $2 to $8, and today is the same pattern on the daily chart. So I think that that's what's going to happen. So I said, you know what? Forget it. That's fine. I'll just buy this at 650. So I bought 7,500 shares at 650 for the $0.50 break. Kind of similar to what I did the day before, buying at the $0.50. Well, in this case, we didn't get follow through. It immediately dropped down to 630, and then it dropped down to $6, and then I stopped out at 575, and I lost 25% of my account in just one trade. And that right there exemplifies, the risk when you trade with large size and when you use margin, that you can have these really big drawdowns that really screw up, your account. And that's basically what happened. I had this really big drawdown, and it was very frustrating. I was really, that whole day I was kind of moping around because losing $13,000 in a single day, having just had the best day in such a long time, making $16,000 on Monday, and then to lose $13,000, I felt like I just was so upset with myself. I'd gone from my account going from like 14,000 up to 22,000, and now we were going to drop back down to like 16,000, and it just felt like obviously a big step back, and it was fairly demoralizing. Now on this trade on RGSE, I know that I made a mistake, and the mistake was that I chased the proper entry. It was extended at 650, and I got in there, and it rolled over. Now, this is a stock that, was already fairly extended because of the previous move the day before. Yes, it was on the gap scanner. It had some volume, but my entry at 650 was 50 cents too high. With my entry at 6, stopping out at 575 made sense. But when you're in at 650, 575 is now that much further away. So I chased it, and that was the big mistake there. Now, just today, we saw this stock MYOS, and it ran from $3 all the way up to $5, a 2-point run. And on this one, I said, guys, I need to wait for a 5-minute setup. I can't chase it. I can't. I need to get that clean 5-minute setup. And you know what? We never got it. It never happened. It just went parabolic. And although even right now it's sort of consolidating and giving us a 5-minute setup, the problem is this stock went from 0, to up 80% in 30 minutes. And when they go that extreme, that quickly, they don't usually give you a nice, clean, gradual pullback. They go up and then they come back down. And unfortunately, on this one, I missed my opportunity. Now, the interesting thing here with MYOS is that I could have gotten away with chasing it. If I had chased this stock, I would have done okay, right? So sometimes you will get away with chasing, and other times you will get stopped out, and you'll lose money, like what happened on RGSE. So how do you know when you should chase and when you shouldn't chase? Well, for me, I obviously need to be a little bit more mindful about my share size when I decide that I'm going to chase a stock. If I'm making the conscientious decision that this is extended, but I'm going to buy it anyways, I should be reducing my share size. That's number one. Number two, stocks that are more likely to give us a big breakout on a 1-minute setup or that are worth chasing are stocks that have a really strong daily chart. MYOS has a very strong daily chart today, much stronger than RGSE. So that's in its favor. And number two, it's just right now starting to squeeze. It hasn't been moving all day long. It hasn't been, it's not well into the run. It's at the very beginning of the squeeze, and traders are just starting to see it and just starting really to jump into the trade. So we're still very much, it's still a very fresh momentum stock. Whereas RGSE on the second day was a bit more played out. And I think traders had already, kind of had their fun with it and were either short biased or just no longer interested because we simply didn't see the follow through that I was expecting. Now, the interesting thing this week, and of course on my biggest day where I made $22,000, I traded 4 stocks that day. And 3 out of the 4 ran 50 to 100%. And the 4th one ran maybe 40%, and then it rolled over completely. And you never really know which of these stocks hitting the scanners are going to make that huge move. Which one is going to go from $2.80 to $5, and which one's going to go to $3.05 and then drop all the way back down to $2.50. So with that in mind, you always have to set your stops. You have to set tight stops and know your max loss on every trade. And you don't want to allow a single trade potentially to blow up your account. And although losing 25% was not blowing up my account, it certainly was a very big drawdown, and I wasn't not something that I was planning on or that I was happy that I had to experience. All right, guys, so the topic of today, and this is very topical to my trades this week, is the fear of missing out. Obviously, it's been a really wild week for me, and this week with the huge wins. Now, the huge win on Monday wasn't a result of fear of missing out. That was just I got aggressive. I was in the right place at the right time. The strategy worked, and it paid off big time. Now, I've been trading with larger share size this year, and I've also been trading with larger share size because I've been trading in 2 accounts. So in some of these positions, I've almost been doubling my risk because I have 10,000 shares here and 10,000 there. So when it works well. Obviously, when it doesn't work, you lose $13,000. But on Monday, everything connected, and I was able to capitalize. But my best day of the year was quickly followed by my worst day of the year, losing $13,000. And that type of loss can really start to trigger these emotions. So the fear of missing out, it's a phrase that really embodies both the fear and the greed, which are the 2 emotions that drive the stock market, right? The fear of missing a big winner, combined with the greed and the jealousy of knowing that others are hitting that trade and that you should be getting a piece of it too. So it's, that fear of missing out, it can really manifest in a number of different ways. And this week, it hit me really badly on RGSE, as you guys already know, and as I've already mentioned. But at the same time, that emotion carried me through the week and led to my biggest day and has led to me making $37,000 this week. So it's to say that this emotion is not necessarily a bad thing. It's just one that you have to be able to come to terms with and really understand and have a sense of awareness for. All right. Now, fear and greed, specifically the fear of missing out, these are emotional responses to a trigger. And that trigger can be any one of the following. Number 1, you see a stock suddenly make a big move and you completely miss it. Maybe you weren't trading that day. Maybe you were, you weren't even watching that stock. But for whatever reason, a stock has made a huge move and you missed it. Trigger number 2, you were watching a stock. You tried to get in, but your order didn't fill. And what should have been a huge trade ended up being nothing at all. Or number 3, you see somebody on Facebook, Twitter, or even in our chat room bragging about big profits, and you feel like you missed that opportunity. You missed the trade, and now you're on the wrong side, or you're break even, or you're at a loss. Or number 4, you're in the chat room. Let's say you're in our chat room or any chat room, and you hear me take a trade, but because you weren't prepared for an entry, you end up missing that opportunity completely. And then you feel frustrated, and you've got that fear of missing out, that you just missed out on something. So these are a few of the triggers, that I've experienced over the years as a trader. So how do you respond to those triggers? How do you respond to a trigger in general? Now, the common reaction, when you feel like you have a fear of missing a trade, the common reaction is simply to do everything you can to alleviate that fear. And how do you alleviate that kind of fear? You press the buy button. You get in. You no longer have the fear of missing out once you press the buy button and once you're in the trade, right? Or what might happen is the next stock that shows even the slightest bit of potential, you jump into it and you, barely without even thinking, you just jump right in and try to capitalize on that opportunity. All right. So here's the problem. When you do that, you really aren't thinking about risk when you take that trade. When you start impulsively jumping into the next trade, you're not thinking about risk. All you're thinking about is profit potential, and it's the greed. Now, that's kind of what happened to me. I know this. This is what happened to me on Tuesday when I bought RGSC at 650. I was in that same kind of fearful state of having just missed a big trade, feeling frustrated that I didn't get filled. And I said to myself, this thing's going to go straight to 7, maybe 8. So you know what? Why not just jump in? I don't want to miss it. And so I jumped in. 7,500 shares at 650. And I was instantly down 25 cents on 7,500 shares, and I was looking at a $1,500 loss. And at that point, that's when, the fear kind of kicked in. Instead of selling when I was down, selling when I was down 25 cents, I was feeling afraid. I was feeling afraid of taking my first big loss in the small account. I was afraid of, what people might say about me, what people in the chat room would think, if I would be able to bounce back quickly. And I really wanted to not make that loss real. And so to not make that loss real, the easiest thing to do was to keep holding it. And that fear compounded itself. I kept holding. Instead of selling, I held. The next thing I know, I'm down 50 cents. And of course, the fear intensified because now I know I'm really making a big mistake. And the embarrassment is going to be even worse when I have to explain why I held this stock down, 50 cents. And at that point, I realized that I needed to try to minimize the loss as much as I could. And so I decided, well, I need to get out of this stock. I am going to take a loss, but I'm going to try to wait for the first candle to make a new high. And unfortunately, we broke below $6, dropped immediately down to 5.75, and I said, I got to sell this. I overcame my fear, and I made the loss real. I said, you know what? Just take the loss. It's not that bad. You'll bounce back from it. I knew that I couldn't allow this stock to blow up my account. So I pressed the sell button and lost $5,500. Now, the stock ended up dropping 2 more points, from 550 down to 450 and down to 350. If I had held it stubbornly, just held and held and held, I could have lost over $20,000, and I could have totally erased my entire account. Everything I've made from January 1st until then, I could have given back. Now, everything that I just talked about occurred in a period of about 2 minutes. I got in right out of the gates. As soon as the market opened, it popped in that 1-minute candle from $6 to $6.50. I got in at $6.50, and in the next 1-minute candle, it dropped down to $6.25 to $6 for $5.75, and then to $5.50, and then down to the 480s. It dropped very, very quickly. So you can see how, as an active trader, as a day trader, we have a very short period of time to make quick decisions, and these decisions can be extremely important in whether or not we make 10,000 or we lose 10,000. I'm glad that I was able to overcome that fear, but that fear allowed me to hold the stock a little too long. The fear of missing out is what got me into the trade. The fear of missing out is also sort of we call it the fear of missing out, but it's really driven by greed. But the fear of missing out was what caused me to chase the trade. And then the fear of making a loss real by pressing the sell button encouraged me to hold it a bit longer. The fear of loss, right, as Dave says in the chat room. After I had the fear of missing out, I had a fear of loss. I didn't want to take the loss. I didn't want to make the loss real, and so I held way too long. Now, I always talk about breakout or bailout. If you get into a trade and it doesn't work immediately, bail out. And I certainly had the opportunity to sell when I was down only 20 cents. But with 7,500 shares, that would have been a pretty big loss, and I was afraid of taking that loss. All right. So, you can see how quickly all these thoughts had to run through my mind in a period of, 120 seconds. I had to make a decision, and that decision potentially could have ruined my account if I decided to keep holding it, or minimized the loss. So I ended the morning down $7,500 or $5,500 in my small account, 75 in my big account, down 13,000 on the day, and I felt embarrassed. I felt frustrated. I felt defeated. Obviously, I'm doing this all in a very public way, and I knew that that would be something I would be challenged by during this small account challenge. That I'm not doing this, to just challenge myself. I'm doing this to show you guys that it's possible. And that means when I have good days, I've got lots of people celebrating with me. But when I have bad days, I have people saying that, why'd you do this? Why'd you do that? And even on my good days, I have people, criticizing me as well. I had someone say yesterday that if I took away the trade ideas scanner, I'd be nothing. And I was like, well, I mean, I guess the trade ideas scanner is a pretty important tool. So I'd have to go back to basics. If you took a chainsaw away from a lumberjack, he'd kind of be nothing. I mean, he could use the old-fashioned method of using a saw, bow saw or whatever it is. But you're always going to be haters, especially when you do something like this that's very public. So in any case, I've seen many traders run into the struggle of revenge trading. And on Tuesday, after I took that big loss, I did not continue to trade. I said, that's it. I just totally blew up my max loss. My max loss is supposed to only be $1,000, and I just blew way past it. I'm done for the day. I'm not going to keep trading. There's no way I'm going to recover this in one day. I just got to throw in the towel. And that's what I did. Now, when I did my video about being in Las Vegas on the racetrack, one of the things that I mentioned is the fact that when you're driving a race car, if you crash that car, if you're going way too fast and you screw up and you crash that car, the car is damaged and it needs to go into the shop for repairs. And during that time when it's being repaired, you have the opportunity, and really it is an opportunity, to reflect on what went wrong. Traders don't have that same opportunity really, because as soon as you take a loss, you can jump right back in and keep trading. And I could have kept trading all the way to 4 p.m. And you know what? I've done that in the past. That's called revenge trading, when you're trying to get back what you lost. So I fought the desire to do that on Tuesday, and I said, I just got to walk away. I'm done for the day. I made 16,000 on Monday, lost 13,000 today. I'm still up 3,000 on the week. Let's just be happy with that and take a break. So the thing is, on Wednesday morning, as I was sitting down by my computer, I couldn't help but think I would like to make back everything I lost yesterday. Sure, who wouldn't, right? I'd like to make $13,000 today. I'd like to get my account up to $25,000, my small account. And I just felt so frustrated because I was really celebrating and really excited on Monday, and then that was followed by being really bummed out on Tuesday. So on Wednesday, I wanted to make it back. But at the same time, I knew that I couldn't force trades. And in the past, when I've had that desire to get back up on the horse and just, really get back in the game, I have done some stupid things, like just anytime I see a stock spiking up, buy 15,000 shares. I only need 30 cents. It's $4,500. Do that 3 times and I'm back. And you can't do that. Doing that is how you lose 30 cents 4 times in a row, and you lose an extra $12,000 because you're being emotional. You've thrown risk management out the window. You're not focusing on good quality setups. You're trading impulsively, right? Now, what I decided to do on Wednesday is I said, okay, Ross, look, here's the deal. Obviously, you want to try to make back the money. That's an emotion that you feel right now. I understand that. Of course, this is me talking to myself. Of course, I understand what I'm saying. So, yeah, I understand what you're saying, Ross. That's, you're dead on. You want to make your money back. We're going to make it happen. But don't forget, only trade A quality setups. Don't be aggressive on anything if it's not A quality. And if it's not A quality, don't trade. And so that was my mentality coming into Wednesday morning, which was also the 1st of February. Now, for those that don't know, I have a history of losing a lot of money at the beginning of the month. And that is also an emotional behavior, because I want so badly not to have a losing month that I'm kind of desperately looking for a winning trade. And when you're looking desperately, you lower the quality standard of a trade that you're willing to take. And so in the past, I've had this history of losing a lot of money at the beginning of the month. And I was very much aware of that when I was thinking about being aggressive on, Wednesday, February 1st, that this is the beginning of the month. This is really not looking good. What if you made $40,000 last month and here on the first day of the month you lose another 10 grand? You're going to start the month in the hole. So don't do that. Just start slow and steady. And so my approach on Monday was that if I saw a good setup, I would be aggressive. And I took 3 trades: HMNY, PULM, and ETRM. And I made, on Wednesday, I made back about $6,800. I was aggressive. I took big share size, but I only did it on A quality setups. So what I was able to do was I was able to harness that emotion into a positive way, right? And that's where the sense of mindfulness, that presence of mind, really paid off. So I knew that taking 2,000 to 3,000 shares would not get me back to where I was before I had the loss, and that I would need to take 6,000 to 10,000 shares. But again, I knew that would lead to deeper drawdowns if I was wrong, and that's why I needed to be so smart about what I was willing to trade. So I ended up having a little bit of a rebound day. And I was like, I made $4,500 in my small account, $2,200 in my big account, not bad. $6,000 is a great day, but of course, here's me saying, oh, it's not bad. I mean, it's not great. It's still red versus yesterday, but, whatever. I guess it's okay. And so I'm still kind of moping around. And then I come back on Thursday morning with the same kind of mentality that, okay, you're back up to $20,000. You're only 5,000 away from that first target of 25 grand. You can do it. Just one trade, you're going to get back on the horse. And if you think about my P&L, let's see, Monday was a big step forward. Tuesday was a drawdown. Monday was a little bit of a move back up. Do you see the bull flag forming? And then Thursday was the break through the high as I squeezed back up through high a day. And now today was a little bit of continuation. So on Thursday, and I also want to preface this by saying that I have been struggling with the fear of missing out ever since I was away in November when DRYS ran to $100. On that day, I was checking my phone while I was in meetings, and I was getting more and more frustrated and upset. I was getting just so aggravated that I was missing the biggest opportunity that I'd ever seen in the market. I've never seen a stock go, from $2 all the way up to 100. Just had never seen that before. And of course, I was out of the office that day and I wasn't able to trade it. So I've kind of been carrying that frustration, that baggage for a long time. And anytime I see a stock starting to move up, whether it's GLBS or it's ETRM or IDXG or MYOS, HMNY, RGSE, I see it and I'm like, I need to jump on this. I cannot be the guy that misses another big move. And so I've been jumping on these with more size. I've also realized that because my metrics are good, because I have a good profit loss ratio and I have good accuracy, the only difference between me making 20,000 in a month and making 40,000 is share size. If I increase my share size, I'll make more money, and that's why I made 40,000 last month, and I'm up $37,000 this week. So $37,000 on the month of February so far, and it's February 3rd. Now let's come back to Thursday morning. So Thursday morning, I recognized that on Wednesday I had kind of mismanaged my trade on PULM because it ended up actually going parabolic. It made a really big move. And so I noticed that the market right now is extremely strong. We're seeing some really good opportunities. HMNY, PULM, let's see, what was the other one? ETRM. And so on Thursday morning, the first trade I took was PULM. I jumped in 7,500 shares, made 10 cents, $750, $800. I was like, all right, that's good. Again, a lot of people would be totally happy with that, and I'm like, that's fine. I'm, 20% of the way to the goal, $5,000. And so I look for the next trade, and I see BNTC hitting the high a day scanner. and I look at that and I say, that stock is a former runner with a history of making big moves. I look at it, I jump in, I get in 6,000 shares at 255. It pops up to $3. I'm up $2,700. I end up making about, I think, around $4,500 on that stock that day, trading the first pullback and then the second pullback. So BNTC, it popped up and it surged. And if I back out of this just for a second, I'll just back out of this webinar or this slide that I'm running here for you guys, just to show you the BNTC chart, because it was really a beautiful chart. This is the type of thing that we love to see as traders. The move from $2 up to $3, pullback from 3 up to 433, second pullback. These circled areas, these are the safe opportunities to get in these types of names. I'll show you guys who are watching on screen or on Facebook Live. Super, super clean. And I realized, okay, clearly there is some strength in the market today. So we had BNTC, and then we had, of course, PULM, some good trades on that. This was today. Go back to yesterday. PULM from $4 to $7, and we had NAKD, which parabolic from a low yesterday of $1.20 up to a high today of over $4.50, totally parabolic. And by scalping these opportunities, getting in, booking the profit, the first 1 minute pullback, the first 5 minute pullback, yesterday, or yesterday, Thursday, I was able to have the biggest day I've ever had, $22,000 in total profits. But I came into the day feeling a little bit emotional, and I was being a little bit aggressive, right? Now, this was, again, because I had just had this big loss. So the interesting thing is that I would not have made $22,000 yesterday. I guarantee you I wouldn't have made that much money if I hadn't lost $13,000 on Tuesday. Losing that money on Tuesday is what is really what triggered that kind of emotional response to get more aggressive. The good news is that I have the educated intuition, which is the result of years of trading, to channel that emotion, to harness that emotion to help me be a better trader. So a lot of traders will say that you should no one should really say this, but you should bottle up your emotions. You got to be like a machine. And I try to be that way sometimes, like just be a machine. Don't let this get you rattled. Don't get frustrated. Don't get emotional. Next thing I know, I'm wallowing around all afternoon. Oh, I lost $13,000. I was watching this movie. It was like Louis the 14th on Netflix, and they show this woman who's, in labor, or no, she's got poison, and she's laying there on the bed, she's dying, and I'm like, she's having a better day than me. Look at, I feel like I'm in the same boat as her. We're both just, this is the worst. This is no fun, and this is the struggle with trading. That as much as you try to not allow it to get to you, you just can't help it. And on Tuesday, of course, when you have these extremes in the P&L, I was just feeling really bummed out. Of course, yesterday I was like, wow, yesterday I was almost like, that's crazy. I never thought I'd have a day where I make $22,000. So I kind of was just like, I don't think I was like celebrating. I was just sort of like, that was nuts. And, what a fantastic day. And now here we are on Friday, and I had said I would not trade on Friday. I was like, I'm not going to trade on Friday. I'm just going to wire out all my money from SureTrader and go put it into my SpeedTrader account. I'll start Monday on a clean slate. I called SpeedTrader this morning. They said my account won't be ready Monday. They've got to do some more paperwork. So I was like, oh, well, in that case, I guess I might as well trade in SureTrader today. But then I was starting to feel like maybe I jinxed myself. So I put on my lucky sweatshirt, and I was like, all right, we're gonna do this. We're gonna trade this, and I took 2 trades, and I made $4,800. So now I'm up over $40,000 in this small account. And today in my big account, I made $8,000 on DFFN. I took 15,000 shares, and I made 50 cents. And I was like, that was good. I'm gonna buy the first pullback. I bought the first pullback with 16,000 shares, and I was up $4,000 on it, and it turned around. It dropped, and I ended up losing 8,000. I lost everything I made. So in my big account, I'm up. I'm actually down $86, and this is again me finishing the week with it's almost like I win the race, and after I cross the line, I fall off my bike and like scrape my knees because it makes it impossible to enjoy the victory. And this happened yesterday too. I made $22,000, but my last trade of the day, I lost 750. So I have this sort of I don't know what it is, but I keep doing it. And the good news is that in the sense it I think keeps me kind of grounded. It reminds me at the very end of a good day that you can just quickly give back money as you make money. This week in total, I have lost. It's really pretty crazy, but I've had over $20,000 in losses this week. Despite being up 37,000, I've had 20,000 in losses. That means this would be a $57,000 week if I didn't have any losses. But again, that's not reality, and I wouldn't have had the aggression. If I hadn't gotten knocked down, exactly, I wouldn't be so hungry to bounce back, and I would have been probably content just to do 2,000 a day, 3,000 a day, maybe 4,000 on a good day. I wouldn't have pushed it so hard, and pushing it is what propelled me up to this level. All right, so here's the thing. When you guys feel that sense of fear, the fear that you're missing out on a trade, you see that trigger. You need to train yourself to have the presence of mind, to be mindful enough to realize that you're experiencing that emotion. And now the first step is tracking that you're having this emotion. I'm feeling, and you can say it out loud. It seems silly, but I do it a lot. I'm feeling angry. I get a flat tire. I'm feeling angry right now. It's like I say the emotion, but because I say it, I now am having the presence of mind that I'm angry. And there are times in my personal life where I'm having just not a good day, and I'm like, I'm feeling agitated. So this person around me is maybe getting on my nerves, more than I should let it. And let's just keep this perspective. I'm a little agitated. I'm not going to take it out on them. So interestingly, trading has made me more mindful of how I can act when I feel emotional, whether it's happy, sad, frustrated or whatever. So the fear of missing out is an emotional response, but it's not a bad one. It's only a bad one if you allow it to overtake your rational mind and common sense. So for me, I was able to use the fear of missing out this week, and I was able to use fear in a sense to drive me. I was able to use it almost as the carrot in front of the rabbit to really encourage me to push harder, to dig deeper, and then produce the best month or the best week that I've ever had. And this, may end up being one of the best months I've ever had, depending on how the rest of the month goes. If you can improve your sense of awareness and harness FOMO, the fear of missing out, you can improve your trading. So this no longer has to be a bad word, right? And that's the big thing that I want you to take away from this. Over my years of trading, it took me a long time to make these kind of realizations. And I hope that you guys are able to learn from what I'm saying and not have to learn by experiencing this. And I'm one of those people. This is something I was saying to a student yesterday. I was on the phone. He was saying that I like to do things on my own. And I said, well, you know what? So do I. That's what most day traders are like. We want to do things on our own. And this is the inherent conflict with trying to provide education for day traders. I'm trying to provide education to a group of people who desperately want to be independent. I wanted to be independent. I didn't want, I didn't want a regular job. I didn't want to keep doing that. I wanted to be on my own. And that same, just sort of personality trait is why I didn't seek out education when I started trading. I was like, no, I'm going to do this on my own. I can figure it out, right? I want to be independent. But here's the thing. I've gone through all of this. I went through all of these struggles. I can help you avoid some of the trial and error that I had to go through. So even if you're in our chat room, you're part of the community, maybe you're not in the classes yet, you haven't joined them, just by being part of this community. You're surrounded by traders who are going through some of these same experiences. The fear of missing out, emotional trading. Someone who says, well, I bought MYOS at the high a day, 2 weeks ago, and I'm still holding it. Some of us have to learn by experience. We have to, fall off the bike a couple of times before we really get it. But my hope is that by us talking about these things, it will at least help you process these, these kind of experiences in your journey to becoming a trader. Because these are things that we all struggle with, and we'll all struggle with at one time or another. All right, so this is the thing. I used to think that you have to not trade from a place of fear at all. You have to just totally put that aside. But what I realized was that that's almost impossible. It's very, very difficult to not be emotional, to not have emotions. And so, you look at any trader, traders on, a hedge fund, a trading desk. They're not going to say that they don't have emotions, that they don't get angry, that they don't get frustrated. It's not about not having emotions. It's not about not being afraid. It's about facing that fear, and it's real fear, facing that fear with the bravery to not give into it, right? Or to be even better, be able to channel it and harness it. So you're harnessing that emotion to help you be a better trader and maybe even a better person. And this obviously has been a fantastic week. I'm hoping that the month of February, these first 3 days are a sign of a fantastic week to come and month to come. We'll see. I really don't know, but the market has been exceptionally strong. We've got several stocks almost every single day going up over 100%. MYOS is up 99% right now on 11 million shares of volume. So there are lots of opportunities every single day. And my job, is to find those opportunities, to point out what I consider to be some of the best entries, and to trade my strategy. And that's what I've been doing, and that's what I'll continue to do. I'm thinking that this is going to be a pretty strong month. I know that there's hot streaks, and when we have those hot streaks, that's when you have to be aggressive, you have to capitalize. And this is a week where I'm making $37,000. If I have a week later in the month where I'm break even, it doesn't matter, because this week is going to tide me over. Now, just to step back a little bit, last year I didn't start off nearly as well as I've started this year. I started with about 11,000 in January, and then only 5,000 in February and 7,000 in March. During February and March and into April of last year, I was doing my small account challenge at SureTrader. And although at the time I was proud that I took $1,000 and turned it into $8,600, I now look at that as being totally pathetic. I mean, look at me now, 500 to 40,000 in 23 trading days. So I've really one-upped myself, and I don't think I'm even going to dare do this challenge again next year, because I don't know that it would be even possible that I could top this return. But what I am going to do is keep trading. I'm now 40% of the way to $100,000. $100,000 is my first, I guess is my next target now. 50,000 is going to be a nice milestone. So put a milestone at 50,000, another one at 75,000, and the last one at 100 grand. That was my goal for all of 2017, to turn $583 into $100,000. I'm 40% of the way there on February 3rd. So things are looking good, but I'm not going to put the carriage ahead of the horse. I'll take it slow, be aggressive when the trading is good, step back, ease off the throttle when it starts to slow down, and make sure that I'm trading in a smart way. And I know that I got a little aggressive this week, and I want to try to taper that back a little bit. I think now that I've gotten such a big cushion on this account, I can kind of, some big swings on the way up, but now that I've really built myself up, I can kind of just get into the grind. And if I can grind on $4,000 a day, I mean, that is $1 million in 1 year. And I don't expect to be able to make that amount of money consistently. I know that there's going to be lots of slow days, but, that is the potential. That if you can really figure out the strategy, then all you have to do is size up. And I know there's traders out there. I mean, I see them on Twitter and stuff like that are taking 30, 40, 50,000 shares on a regular basis and having $30,000 days on a regular basis. So, It can be done. It's just whether or not you're in an emotional place to handle that amount of risk. And I'm not really there yet. Even my first trade yesterday, I wasn't really risking much more than maybe $1,000. But we'll see where I'm at in 6 months. Just keep working along, and just keep making progress, and always keep trying to be a better trader. All right, guys. So now we're going to do just a few short minutes of asking questions. This has been a longer than expected behind the trades episode, but I'm glad that we really got into this topic because it's something that I have so many traders ask me about on really almost a daily basis. All right. So any questions that you guys have from the week or from some of the trades that I've taken here today? So let me back out of the slides, and let's see. I will jump into screen share. So MYOS, obviously, I missed doing this recap. It's very rare that I would take a trade at lunchtime. I don't know that I would have taken it today, but you can see the first 5-minute candle to make a new high was over 450. That candle popped to 470 and then dropped down to 437. So if you got into a trade with, let's say, 5,000 shares at 450 and it pops up to 470, you're up 20 cents. It's $1,000. So to go from being up $1,000 to down 750, because you would have had to hold until it dropped back down and then goes up again, be a little choppy. It's not something that I would be super excited about. So Andy, I'm a momentum trader. I mean, I'm a day trader, and the strategy that I trade is primarily a momentum day trading strategy. So that means I'm looking for stocks that are moving. And the way I find those stocks is by using these high-a-day scanners and then searching the stocks that are on those scanners to see if they have news, if there's a reason they're running. Interestingly, a lot of stocks make really big moves with no news whatsoever. So news is not always required if the stock does have high relative volume and is starting to get some really good action. All right, let's see. The starting balance for my Speed Trader account will be exactly what's in SureTrader. I'm going to take that money and I'm going to move it into my Speed Trader account. So I think I'll be starting on Monday with, what was it, $40,861 plus or minus. Just commissions and ECN fees sometimes change that a little bit, but right around there is where I'll start on Monday. So it depends what Speed Trader says. If I can fund my account on Monday, then I won't trade in the small account on Monday. That'll be the day that I wire the money out, and I will wire out and then wire into Speed Trader and hopefully be able to trade at Speed Trader on Tuesday. So Sarah, the commission structure at Speed Trader is much lower. It's much better, and that's obviously preferable once you're above the $25,000 minimum. But until you're above that level, you got to trade at SureTrader, which is why I started the challenge at SureTrader. With $583, you don't have a lot of options of where you could trade. So I started at SureTrader, built up to 25K, which was my first mark, and then I said once I hit 25K, I would move to Speed Trader. Now, I didn't realize I would, blow through 25K all the way up to 36,000, and then there'd be some delay in opening my account. So right now I'm just continued to trade there and added an extra $4,800 today. But my commissions today are $250. So those commissions are a pretty big piece of the profit. It's something that I would always have to deal with if I stayed with SureTrader. So the minimum balance, I'm not sure if it's 25,000 or 30,000, but definitely the minimum balance to day trade is 25,000. So, all right, guys. Well, we started right around 12 noon, and it's just about 1 p.m. So I'm going to ask if you guys have any other questions. Leave comments in Facebook, on YouTube. This is going to go on Facebook, YouTube, and on our podcast. And sounds like it's time for me to take the dog for a walk and go get some fresh air. So I'm going to take off, and I will see you guys all first thing on Monday morning. All right, guys. I hope everyone has a great weekend.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing